Hello everyone, welcome to the Ashworth Wealth Weekly Market Update. Kind of jump into this week's slide. This week we're going to talk about gold. This week's chart highlights gold's record surge. It shows its inflation-adjusted value still lags far behind the stocks and bonds, however. Gold prices surged to record high in recent years, appreciating over 40% year to date. As of this last week, they were at $3,775 per troy ounce. Last year, gold rose 27%, outperforming the S&P total return. But historically, that isn't usually a good thing. What that means is gold generally rises, fast and then just stays stagnant for a while. Gold demand has been really, really high. We talked for years about whether or not people should have gold in their portfolio, and the general answer to that is probably not. It's okay to own a little bit of gold. I remember years ago being at a Berkshire Hathaway shareholder meeting, listening to Warren Buffett and Charlie Munger talking about gold. Somebody asked them the question, why shouldn't we own gold? And Warren's favorite, or I guess not favorite, but famous response to that was, I think investing in gold is a great hedge against making money. And really what he was talking about is gold generally is not a good place to invest long term. There are periods of time that gold goes up. That's usually based on primarily supply and demand. Doesn't really have anything it's backed by. Doesn't pay a dividend. Somebody once told me that if you went back to AD 0, 2025 years ago, a gold piece would buy maybe a robe, some sandals, maybe a belt, that type of thing. And if you had a gold piece today, it would probably buy a really nice suit, a really nice pair of shoes, and a really nice shirt and tie. Gold is generally good as far as hedging against inflation, but it's not generally a great long-term growth play. Gold has generally just not risen as fast as equities or stocks have done over the last 100 years, and so it's generally not a good long-term investment. Doesn't mean you shouldn't have a little bit of gold. We generally do not put gold in portfolios. If you want to own gold, we recommend that you maybe have a little bit in a safe, or the same thing, we would say the same thing for silver. But a lot of people think that it's a great way to diversify, but as a general rule, it's pretty much just a hedge. If inflation takes off again, then gold usually outpaces the pace of inflation. So a lot of the reasons why gold is surging is because a lot of foreign governments are buying gold up to shore up their balance sheets, etc. You have a lot of issues with people trying to buy and sell gold at different times. They want to just make sure that they've got access to it, etc. So as a general rule, the answer today is while gold prices are hitting all-time highs, we generally don't recommend you go out and buy a bunch of gold. You've got to store it. You've got to understand that it can be stolen. It's very difficult to steal somebody's portfolio. A physical asset, it's easier to steal, etc. So we recommend that you stay the course and have a good, well-rounded portfolio and not worry about what's being sold on late night, cable television on the best way to diversify your portfolio, etc. So hope that makes sense. If you have any questions, please reach out. We're happy to answer questions at any time. I look forward to seeing each of you as we continue to do reviews this fall. As usual, you can always forward this to anyone that you want to. If they have any questions, we're always happy to meet with them as well. We'll look forward to seeing you guys soon. Thanks.